harvested so far. I will say, what do you mean by the term called harvesting? So, especially from a perspective of an investor or from the perspective of a businessman to make the maximum utilization of an intangible asset. And I want to mention these are the three standards I refer that I'll be referring to. And I want to take you to a research report. Annually, globally, this is one research report called Global Intangible Tracker. And it is a study on intangibles assets by a London-based institute called Brand Finance Institute. And they have brought out a research report, and you can download this report and just have a look at it. You'll be quite surprised. All over the world, globally, the percentage of intangible assets. Please look at this. India has an estimated intangible asset component of 74%. This is of the total enterprise value. Of the total enterprise value, 74% of the enterprise value is an intangible. So what is tangible portion? It is only 26%. And we are actually third rank. Now, which is first rank? It is United States, and second rank is Switzerland, and we are just behind Switzerland with maybe that only the point difference is there. So we both are almost close to 74 only. Now, why I'm mentioning this? Please look at that. The total enterprise value of all the companies put together in the world. They have actually taken some of the top companies in each and every country. So they have actually collected 500 such companies, and Indian companies also is included, and they have estimated that $365 billion. So maybe in terms of Indian rupees, it is 25 lakh crore. Okay, and for that is India's total enterprise value. When you compare that with the global enterprise value figure, it is 3,339 lakh crore. So which is almost not even 1%. Not even 1%. It is just 0.8% of the total enterprise value of the globe. That is Indian. This is number one point. And second, what is the percentage of the intangible assets? You will be actually surprised. This is in terms of a pictorial representation I want to make first. Of the total enterprise value, the book value and the market premium to book value. If you just look at it, that gray color portion alone, please focus on. The book value of equity, one portion is your tangible assets. The other portion is your intangible. So that's your total, which has been funded by both equity and debt. So, and what is that other portion? That is a gray color, which is the 1/3, which is 1/3 is undisclosed intangible assets. There are many Indian companies, I must say, even intangible assets are not disclosed. So I will say only tangible assets. Intangible, both disclosed and undisclosed, is 2/3. Is actually on an average scale, it is 2/3. So that is why India's ranking is actually 74%. I want to mention one more point, that disclosed and undisclosed intangible asset portion of some of the very popular companies in United States like Facebook or Microsoft. Okay, so all these companies, it's actually 90% and more than 90%. And today, if I ask you a question, tell me the first name which that comes to your mind when you speak about spreadsheet. Spreadsheet means immediately what will come to your mind. I will not tell you, that you can tell. Then I'll bring an Indian brand. I want to ask you an Indian brand which is an adhesive. So please tell me an Indian brand which is an adhesive brand. Immediately what will come to your mind is Fevicol, because that is how even the advertisement would have been made. So anything that will be, so stick down to it. Even they will say even death cannot part you when you apply Fevicol. So that is a kind of, may I request my co-host to actually mute everybody. Okay. My dear participants, being a very serious topic, I wish here and there, we'll be hearing our friend's voice as a icebreaker, but nevertheless, that icebreaker is required, but not now. Maybe at the end of the session, we'll have a lot of questions to actually interact with. And friends, this topic I'll present for maybe maximum of, say, not entire 2 hours of 120 minutes, but I'll try to present for minimum 60 minutes to say 90 minutes maximum, not more than that. And I want to invite questions from all of you. So please type your questions and in the chat box, and I will try to actually answer each and every question. Okay, good. So let us understand one thing very clear from this, that rather those of the valuers who are, those of you who think valuing a tangible asset is having more business, no, it is not so. There is 2 times of that worth, maybe in terms of professional work, in terms of activity with respect to intangible assets. And whenever you come across a balance sheet without an intangible asset, I think you have got a right client to actually advise him that why not an intangible asset is in your business. For example, any manufacturing company. And for your information, I'll just share with you some of the interesting places in India. Okay, so this is what do you call it as a cultural, heritage. 13 intangible cultural heritage from India, which is been identified by UNESCO till date. And this is given by the Ministry of Culture. Okay, the Ministry of Culture. You will be surprised that there are 13 such intangible cultural heritage in our country, and many more are there. And UNESCO will list it out. And this is only a beginning, I will say. And please look at this. These are the past 10 years they have listed out. Vedic chanting is I will say it is a intangible cultural heritage by UNESCO. And please look at Kerala. From Kerala, there are 2 such, what do you call it, as intangible assets they have identified. Mudiyettu, the ritual theatre and dance drama of Kerala. It's quite interesting. And please look at the... Now, may I request the participant to kindly mute themselves? I think I've already muted them. Yeah. I think I muted all. Thank you very much. Good. Maybe whenever you want to unmute, I will ask you to unmute. Okay. Now, please look at this list of participants. That the list of the what do you call it as the 13 intangible cultural heritage elements given by UNESCO. Yeah, I have muted all participants. Good. Please look at Kumbh Mela. Kumbh Mela is actually a cultural heritage. Now, please go behind this from a business perspective. We have Madurai Meenakshi Amman Temple, and it is supposed to be listed as the 8th wonder of our country, 8th wonder of the world. Okay, and the business that is around Madurai Meenakshi Amman Temple is only because of goddess Meenakshi. So just imagine if that temple is not there. So will that business be there? No. So it's all God's blessing. So that is a cultural heritage, and that is an intangible asset. Number 2, maybe I'll give from a perspective, not from a cultural, but from a self-developed intangible asset. Then I'll go for a natural intangible asset also. For example, there is a Lord Udupi, Krishna is there in Udupi. So in that town, Around the temple, you have that car street and all. In one of the car street, there is a hotel, a very, very traditional hotel. The name of that hotel is called Mitra Samaj. Mitra Samaj. You can actually Google it and find out. So the one plate idli and vada is so fluffy and hot. Even today, and it's if you go by morning by 6 or 6:30, crowd will be there. You have to actually wait. So I actually requested that gentleman, why not to have a branch elsewhere? No. And he has got innumerable number of offers to open franchise, and they have offered franchisee fee, one-time fee, renewable fee in lakhs. But he is very, very clear that he doesn't want to go for a franchise. Now, why am I'm bringing all this franchisee agreement, and this franchisee agreement is an intangible asset. So I'm just giving some of the, and if you look at his balance sheet, you'll be surprised. Only assets and liabilities, table, furniture, ityadi, and stock of dal and rice, that only is there. The kind of intangible asset in the form of goodwill, in the form of business, the brand, what he has developed for Mitra Samaj, the quality, what he has developed over a period of time, the confidence, the customer relationships, the customer list, what he has got is an intangible. And today, I am speaking about, I am a customer of Mitra Samaj, but I am speaking about not from as a customer of it, but I am seeing the asset behind that customer relationships. So, which is very, very, very important. And today, they are sustaining in business. I repeat, the word called sustainability. The sustainability in a business is only because of that goodwill, which has been the seed that has been sown by maybe a generation or two generations back. You go to a place like Tirunelveli in Tamil Nadu, where Tirunelveli is famous for two things. One is called halwa. Halwa is a very hot sweet. And another is called the arwa. Arwa is actually a weapon. Okay, they'll in Tamil Nadu, the traditional warriors and all, they'll keep their arwa at the backside of their okay. So it's like, and you can see all those stuff in the masala films in Bollywood and Tollywood and all. And this place in Tirunelveli, where you have that hot, what is this, the sweet, okay, halwa. There is a shop called Iritukkada Halwa. Iritukkada Halwa is a place where they don't even have a board, but crowd will be there. And maybe this 6 months they have been affected by because of the pandemic, but business is actually picking up after that. It's only because of that quality and taste. It's very difficult to replicate that quality, fluffiness, taste, and the hotness of that sweet. There is an intangible asset there. So the starting point is intangible asset triggers your business. That brings business. That brings customers to customers. And with this background, I'm now taking you to another interesting intangible asset, which is connected with many of the businesses. These are all some of the natural resources. Natural resources is an intangible asset. For your information, agricultural land is there, but there are certain agricultural land will actually yield better, certain land will not give you. There are certain agricultural land where the water will be there. You just dig it, the next 5 feet or 6 feet or 10 feet water will be there. Just next, what you call the land, you dig it, water will not be there. You have to go 50 feet, 60 feet, 80 feet, 90 feet, then only water will be there, but the quality, quantum will not be there. Wow, intangible asset. Okay, wildlife. Okay, so you are farming. Okay, so the yield from that, especially forest which is around you. Maybe you are a resort. Around that there is a farm. Around that there are actually what do you call this forest? That is actually what do you call it as that enhances the business value of that particular resort. Clean drinking water, clean air. Okay, so all this and maybe minerals. A particular land, we have a very popular film by superstar Rajinikanth. Okay, There, Padayappa is one of the very popular movie. In that, he will become pauper. So from a rich man, he will become pauper because while distributing the assets of the family, superstar Rajinikanth will be given one hill. That's all. This is your asset. Go. That's all. And they will take all those big mansions and all. And the luck will favor nature. God is favoring in the form of natural resource. Please understand this. That that hillock happens to be a granite hill, and granite is a natural resource. That is where the entire film, the concept changes. The fate of the hero becomes from zero, he becomes hero. So guys, natural resource is also a very important, I will say, intangible asset. And today many of the what do you call it as companies, they prefer to actually work in a natural environment. For example, there is a very interesting input I will give about Infosys. Infosys, they always own their offices, and in their land space and their office space. Land space and office space, if you take the percentage, it will be 90 is to 10. 10% only is the constructed building. That land, only 10% will be constructed. 90% will be greenery. 90% we have to walk. 90% there will be, what do you call this, landscaping will be there. Waterways, greenery, trees. Okay, all this stuff. Why? That only adds value to the 10% building. And people today, remember guys, sustainability in business. You take all these natural resources for your generation, Govinda, that's all. Next generation, you are actually leaving desert. So for cohabitation, the sustainability has to be brought in, and that only enhances the business. And all this stuff is, I want to first make it as a beginning to give you as a hint that intangible asset is such a very important asset and whenever I put this question, how will you bring this into the books of accounts? Now there are people who want to say, okay, I have these assets, I want to bring this in my books of accounts. How will I bring it? Okay. Now please look at your India is 38. India is 38 intangible assets. If you have, you cannot, what do you call it as, bring an intangible asset saying that I will debit my intangible asset and credit the revaluation reserve or stuff like that. I'll put it in my revaluation. You can't do that. It is not possible. Intangible asset you can only create by cost. Whatever you pay, for that only you can actually. And India study is very clear in that. You cannot just like that inflate your balance sheet. So whatever you pay, that only will come. For example, you buy one company, and as I told you, if you look at this, if when you buy a company, the tangible asset is only say recently Ultratech Cement has bought one company, one demerged company they bought. Actually, the net asset of the company is only 5,000 crores, but they paid 8,000 crores. What is that 3,000 crores? 3,000 crores is it is actually goodwill. It is technically goodwill. So goodwill is an intangible asset. And why they pay? Because there is a future benefit. There is a future benefit from that business, and that is why they pay. So that 3,000 you can actually create it as an asset, but unfortunately, goodwill cannot be amortized. I repeat, goodwill cannot be amortized. It can only be. So therefore, you need to actually understand very clearly, not only from a valuation perspective, but also many of your chartered accountants and the finance head professionals, you need to actually understand that it is not just like that we can bring an intangible asset in books of accounts. So unless and otherwise you pay for it, okay, and maybe if you are paying for it as a unidentifiable asset, then it becomes goodwill, and goodwill you cannot amortize, and goodwill you can only touch it only for the purpose of impairment purpose. When there is an impairment, you will then reduce it. So that is the only place where your India 38 allows you to do it. So now let us jump into the subject. Okay. Now, before I go into the subject, I want to just give a hint between the term called may, must, and should. These are the three terms that will be used in IBS. IBS 210. IBS 2, not only 210, the entire international valuation standard. So IBS, they use these three words every now and then. So may is whenever they use a term may in the standard. So because why I'm very particular about these three words is you need to understand when the prescription is very, very important to implement. Okay. So for example, when they use a word called must, it is unconditional responsibility. That prescription has to be followed. Now, whenever the word is should and whenever it is called may, what is the fundamental difference? For example, you ask an English teacher, teacher, what is the difference between must and should? An English teacher will say must, should seems to be a synonym word. You can interchange and use it. So from an English teacher perspective, it is correct. But from a standard perspective, they made it very clear that must is like your wife and should is like your mother. So when mother says, you have to do. When wife says, you have to do. But when mother is asking you to buy a lady's finger for 1 kg lady's finger, fresh lady's finger, okay, for sabji ke liye, okay, sabji ke liye. So you go and buy lady's finger, but it's not available. So what to do? And sabji has to be made. So you see, instead of lady's finger, you have baingan, you have a brinjal. So, so you buy baingan and you go and give it to mom. Mom, the bendi nahi hai, so baingani hai. So you try to adjust with it. So what mom will say, okay, should. What is an alternative? Please look at this word called alternative. Responsibilities that are presumptively mandatory. That means what mom says, you have to do it. But unless the valuer demonstrate that alternative actions are possible, because what is bendi nahi hai, so bangan se kaam kar lena. Okay, good. So that is, and must means bendi nahi hai means from this market go to another market, go to third market, go to next city, next town, buy bendi and then come. So that is must, no other choice. So that's what wife says. May is like what your father-in-law, mother-in-law, in-law, sister-in-law, brother-in-law, whoever says it. Maybe you will consider. You will only consider. The may describes actions and procedures. The valuers have the responsibility to consider. Maybe you can even tell in phone itself. You will call your brother-in-law. I have considered it, but it is not possible. So thank you very much. That's all done. So may you have considered it, but you may drop it also. Should and must, you have to understand it very clearly that you have to follow it. Now, these are a comparison I've given with respect to IVS and INDAS, ICRVO valuation standards 302. So IVS 210 and ICRVO 302 intangible asset. These are the two I'll be referring to now and then. Now let me now go into the main subject. Okay, good. Now this is the first point I want to first share with you. What is an intangible asset? Generally, what you cannot see and touch. So many things what I told you, for example, natural resources, the benefit of the natural resources, maybe you can, you will feel the clean air. Okay, you will feel the solar and wind energy. This, for example, there is a place called in Tamil Nadu. There is a place called Aralvai Mori. Aralvai Mori is a place in Tamil Nadu. So it is a very, very, very popular place. It's a very it's a Tamil word, so you have to be very careful in using the word called Mori, Aralvai Mori. So this Aralvai Mori is a place where the wind energy is maximum, and any of the guys who is having the land there, the land value in Tovalai is a place between Aralvai Mori and Nagarkoil, or maybe if it is Valliyur is another place between Aralvai Mori and Tirunelveli. You have a land in Valliyur, you have a land, same piece of land in Aralvai Mori. Remember, the land, for example, 10 acres you have. The 10 acres in Valliyur will be only, say, 50 lakhs. But the same 10 acre in Aralvai Mori is not 50 lakhs. It will be 4 crores. Why? That place you can install a windmill, and windmill generates energy, and that energy is actually you're eligible for tax benefit, you are eligible for IREDA subsidy. Oh, what more? And once you install that and in your plant and machinery, if you have a profit, 80% you can depreciate it. Fed off it, the profit gets reduced, and tax savings is huge. And every year you can put one windmill, and you can save huge tax. And maybe if you install one windmill which is 10 crore, 10 crore 80% is 8 crore. On 8 crore 30% tax saving is 2.4 crores. My God, where is 10 crore land value? And maybe if you invested 4 or 5 crores to for that, within 2 years you have got the tax saving from that investment itself. It's amazing. And that is what. So why that premium? Why that premium? I showed you that dabba. Oh, that table, that premium, that gray color is only because of that intangible asset. For your kind information, guys. So that is why an intangible asset is identifiable. Now, why the word called identifiable? Not that you can actually see and touch. That is a natural resource is an identifiable asset. Okay. Customer list, customer relationships. Okay. Yeah, because we sell air in 2G, 3G, 4G, 5G. Okay, spectrum, broadband spectrum. What is broadband spectrum? You make money in air. Okay, air is actually natural resource. And that natural resource you are actually utilizing. But of course, by utilizing that, you are harming the small birds. That is a different thing. That's what Shankar made a film in 2.0. That's a different story. But a point to be noted that that is a natural resource. That is actually an intangible asset. Broadband spectrum. Identifiable. Non-monetary asset. Why the word non-monetary? It is not a current asset. It is a non-current asset. Okay. So if it's a current asset means it's only inventory. You buy and sell. Okay. So and there is without physical substance. So you can't see and touch. So that is the first point with respect to intangible asset. The second point, I want to take you to the next important point in intangible asset. Okay, maybe point by point I'll try to explain. These are all some of the stuff I don't want to spend time on. These are all just the paragraph numbers. I want you to take you to the second called the types, which is very interesting actually. Now, once you understand that there is an intangible asset, the second one, please try to actually classify that intangible asset in terms of types. So you have to identify my intangible asset will come into what. Okay. Is it a customer based intangible asset, or is it a technology based intangible asset, or contract based, or marketing based, or artistic based? Wow. Now there are certain list I will give, certain list I will not give. And I'll try to give those information. You have to fit it properly. But the standards, whether it is IC, AI, RVO, so this is your IC, this is your, I think this is visible to all of you, what I'm showing to you. So this is your ICA RVO valuation standard. And in ICA RVO valuation standard also, they have identified the types. The types is given in para number. Please look at categories in para number 16. The customer, marketing, contract, technology, and artistic. Even whether it is the IVS valuation standards, look at the international valuation standards, para 20.3. There are many types of intangible asset, but they are often considered to fall in one or more of the following categories. One or more of the following categories. That means one intangible asset may even fall in more than one category. Please look at this sentence, because why I want to mention this point. Intangible asset can generally be classified under the following broad categories. Remember, both the standard, they only list out these 5 broad categories. So, can there be another category? Maybe. The people have to research. For example, natural resources. Can I fit the natural resource under customer or technology or contract or marketing or artistic? Presently, since it is not trying to fit in any of this, I may even say there is a separate category, a natural based. Okay, natural based. Okay, because many things are not natural based here. Broadcasting, right? It's not natural based. Okay, construction, lease agreements. All these are not natural based. So therefore, natural based can be, or natural based, or in IBS they use a word called related, marketing related or customer related. Maybe if you are very, very strict in interpretation of intangible assets, no, I'll only fit all the intangible assets only in this 5 category. Then, since the natural resource, it actually enhances your customer or your marketing of your, that is, it actually attracts more customers. Okay. For example, why do you actually leave a city and why do you want to live in one 5-star hotel in a city and you go to a jungle, and in a jungle log house or a tree top you want to go and what do you say, spend your night there? That too where birds, trees, reptiles, crocodiles, and frog, all those stuff sound will be coming. It's because you actually enjoy that climate, that pristine clear water, the air, and that actually enhances the marketability. Okay, so good. Now, very good. Please try to put as many questions as possible, but I'll try to actually explain to the within the time constraint, whatever that is possible, I try to do it. Okay, good. And with respect to arithmetic of this,
Praveenji, you have sent so many mails for queries. Kindly request, please ask on the platform itself. Even the speaker will be much more happy, and all other participants will also be happy with their queries.
Yeah. So anybody who wants to actually ask anything or say anything, you can raise your hand. I will actually unmute you so that you can actually speak in between also. So that will be even interesting to take it forward. So please raise your hand in between. So I'll try to actually unmute you and we can hear that. Okay, good. Now I'll try to actually answer as many queries as possible. Try to put it. Good. Now let me now take you into. I will not spend much of the time with respect to types because all of you will be aware about it. Maybe one or two I'll just explain for interest purpose. For example, marketing. So which actually enhances your because the terminology, if you look at it, evolvement of business and further growth of business. So especially your trade name, brand. So brand will come under market related. So because and you have the moment you actually classify this, there is actually an importance with respect to classification of your intangible asset. What is the main importance? Classification, main importance is once you classify it, the method of valuation, you can actually crystallize it. So that is one important advantage of it. So for example, market related, there is a prescription in the later part. How will you do the valuation? Okay, now I'll tell you, this is another very, very interesting, customer based, customer related. And these actually enhance. For example, somebody will say, I have a customer base of 40,000 and he's actually sitting on a gold mine. I'm telling you. What is the purpose of having a 40,000 customer list? He is actually for the next generation, not only his generation, till the next generation, his business is, I will say, freezed. So he need not actually go and do marketing. He need to actually only keep quality and give the best service. Okay. So the quality of food or whatever, the quality of the products, whatever he is delivering, that he should maintain. Service he should maintain. So all these things, if he maintains, I'm sure he doesn't need to actually enhance his business, the existing customer base. And how many of us we actually value that customer list? Do we value it? No, let it be there. Let it be. And there are organizations which are in their second generation, third generation, fourth generation they are today. And it is only because of the first generation effort. Like I told you, the Mitra Samaj, it is actually they are in the fourth generation. And the fourth generation, they don't do anything. They just come, they sit, the vyapar ho raha hai, and they are able to mint money, they are able to make money. So it is that seed that has been put there. Have they identified it? Have they valued it? It has a value. 5 lakhs, 10 lakhs, 50 lakhs, 100 lakhs, 1 crore, 10 crore, 50 crore. A value is there. Okay, good. Now, let us come to the next one. So I just want to share with you some connect between these types and with respect to the approaches. So all of us, we know there are only, when you say valuation. So now you have understood what? Number one, you have understood what is an intangible asset. Second, the types you have understood. Now, once you have classified it, next is how do you do the valuation? You have three approaches. All of us, we know we have three approaches. What is it? The income approach, cost approach, and market approach. So now please look at the moment I say one type, I'll tell you something very interesting. Assembled workforce. Assembled workforce. Remember this. I want to share with you something very interesting here. Now you are buying something. You want to buy out a company. For example, there is a software company. You are a software company, another software company. You are buying out a software company. So when you buy a software company, what are you buying actually? You are actually buying maybe their infrastructure, their intangible assets, whatever they have created that you buy. Okay, I'll come to that a little later. Now there is something which you also take. It's called assembled workforce. They have some, say for example, 250 employees. And these 250 employees have been employed over a period of say 5 or 10 years. Chun ke, they would have actually selected these 250 employees and they would have assembled it. And that 250 workforce is an asset. Is an asset. Is it possible to value it? No. That is why people give premium. Goodwill. That goodwill, and India's 38 makes it very clear. India's 38 makes it very clear. Even business combination, India's 103 makes it very clear. You can't actually value separately assembled workforce. And maybe you want to actually value it and you want to put it in your books of accounts. For example, maybe a greenfield company. What is a greenfield company? For the first time, you are actually not an existing company, but you are establishing for the first time. Now you are recruiting staff, you are recruiting employees, labor. There is a process, there is a cost, there is a time involved. Try to accumulate that cost. Don't charge off to P&L account. And that cost, you can actually capitalize it to that extent. So that is what your standard will say. But assembled workforce, as far as India is concerned, in terms of buying out, it will only be recognized as a goodwill, but not as a separate identifiable asset. That is why in identifiability, this may not come. This may not come. Okay, very, very interesting. So please be very practical while you are doing all this stuff. Brand name you can do. Brand name you can value it using income approach. And you have a method, what you call as relief from royalty method is there. So there are various methods in which you can do that calculation. And I'll try to discuss all those methods and some arithmetic method also I'll try to discuss to the extent possible with the available time. Okay. Customer relationships, please look at this. Customer relationship income approach. You already have a customer base of say 4,000 customer base. And remember, these customers only give revenue to you. Okay. And additional revenue. They may refer to others. They may refer your company, your shop to others. So therefore, your customer relationship, how do you value? There is a value for that 4,000 customer base. So please remember that. So these are all some stuff I just want to first give you a clarity before I take you into much technical aspect. Okay, good. Now, let me now take you to the next part. Okay, the purpose. Whenever you want to actually value an intangible asset, now after hearing this, what do you say, this 2-hour program, one client is walking into your office and says, "Sir, I have actually heard one lecture. My intangible asset, I want to bring it in my books of accounts. So please help me." So the first thing what you will do, intangible asset valuations are performed for variety of purpose. And this is most important. And it is a responsibility to understand the purpose of valuation and whether intangible assets should be valued separately or grouped with other assets. For example, I want to buy Mitra Samaj. Mitra Samaj is actually You cannot separate the intangible asset of Mitra Samaj and Mitra Samaj, the land, building, furniture separately. For example, I open a shop called Mitra Samaj in Bengaluru and put name called Mitra Samaj with all the cozy atmosphere. You mean to say I can do business? Maybe people get attracted because of the name and they may come. And once they taste my idli and vada and it is awful, they will not come back. And my name is tarnished. So sometimes it is inseparable. It is inseparable. Especially in restaurant business, it is inseparable. The name, the brand, and everything is actually part of it. Assembled workforce, people, process, everything. It is inseparable. So separable is a very important term, whether separately or grouped with other assets. Sometimes grouped with other assets, you will only pay more premium because it brings you further economic benefit. Therefore, it will only be treated as goodwill. The goodwill is nothing but because it is inseparable. Because it is inseparable, you pay more. Since you pay more, what is that? What is the name for that? The name for that is goodwill. A name for that goodwill because it brings you further economic benefit. It is because of so many factors. It is because of so many. Because it is inseparable, I want that separately. It is not possible. It is not possible. No. Give me your formula alone, how you make Italy. That alone you give me. You keep everything. Brand, you keep it. No, it is not possible. Without Mitra Samaj brand and that, everything is interrelated. Okay. A non-exhaustive list they have given, but it is only for your understanding. Okay. Like it can be for financial reporting, India's purpose, tax reporting, litigation, statutory, legal, consulting, transactional support. For example, I want my intangible asset to be explored I want to lease it for 3 months' time. For example, I'll just share with you something very interesting. Right to access. For example, right to access is an intangible asset. Now, my land is in between. Around, my land is in between. Around, the land belongs to somebody else. I cannot approach the land. I approach my other guy, please give me some space to my land. He says, right to approach your land, there is a charge for it. How he is getting that? It is an intangible asset. It is a natural resource. He is actually letting it out. So therefore, maybe how can we value it? So maybe he will fix a price. So based on the income approach, you can discount it, present value, and treat it as an asset. I'm just giving 1 or 2 examples. So you try to actually extrapolate and try to find out what other multiple you can actually make from this. Okay, good. Now come to once purpose is clear, I'll now take you to the next one. This is the step you need to actually understand, not only with respect to valuation of intangible asset, but also for every valuation. Right? For example, the first step is purpose. Then is called the base. What is the base? You want a market value. Market value is a base. Fair value is a base. Fair market value is a base. And liquidation value is a base. Entity specific value is a base. Investment value is a base. So based on the purpose only, the base will be decided. Which value you want to go for? No. I want brand. I want to sell my brand. So I will go by, that means I want to maximize it. So then I'll go for market value. So go for market. So find whether any comparable data are there. If comparable data are there, not there, you try to go by your India is 113. So try to go by fair value and level 1 or level 2 or level 3 hierarchy and try to fix it. So somewhere you need to actually bring out the base. You need to actually fix that base. Based on the purpose, base has to be fixed. Next is premise. Because base sometimes will go based on the premise. For example, liquidation. Okay, liquidation is a base. So I want to actually dismantle everything. I want to sell each and every asset. Now an intangible asset is that also I want to give to somebody. Now liquidation, there will be broker who will buy my asset and sell it to somebody. No. He will come and enter into an agreement with me. No, don't sell to anybody. I am buying this. agreement, please take 1 lakh, 2 lakh as an advance. He will go and find another buyer, and then he will exchange that asset. So then premise is different, because the what do you call it as the purpose for which the asset will be deployed or employed. I am giving it to a broker. Broker is going to do it for different purpose. I am giving it directly to another guy who is going to use that particular asset. Then he will pay me more. So the broker will pay me less only. So that is why this premise is very important. So and generally the concept of premise is applicable for both normally for non-financial asset, but it can also be for certain circumstances. You can even apply for financial asset. Okay, not in every circumstances for financial asset. For non-financial asset, intangible asset, it all depends upon the kind of users. That is why one of the premises called HABU, that is called highest and best use. So I've given you two guys. One guy best use is a lower value. Another guy's best use is a higher value. So go for that. That is premise, and try to actually maximize it. Whenever in valuation, you try to maximize it. Okay. So first you have to understand what is intangible asset, then the types, then the valuation purpose, valuation approaches, then the fourth is purpose. Okay. Purpose, all this basis, cases, everything I've done. I will now go directly into the approaches now. Okay, good. Now the market approach. Okay, good. Now market approach is one of the, I will actually discount the market approach for only one reason, and I don't want to spend much of the time in as far as intangible asset is concerned, because in market approach you need to actually go for you want to do a valuation of your subject asset. For that you need a comparable asset, and you take the comparable asset value and you say this is the value of your asset, and maybe if there is not comparable you may discount it or add premium. This is the market approach. But for an intangible asset, if your intangible asset is really worthwhile and it has more value, I am telling you, you will not have a very similar intangible asset for comparable. It's very difficult, because your intangible asset is unique. Your intangible asset is unique. And the way you are going to actually explore and experiment with that intangible asset is different from what the others will be doing it. Okay, for example, you may use your natural resource for grazing purpose only. Okay, for only grazing purpose. You may use your natural resource for not for grazing, but for doing a farming activity, like for poultry farming, sheep farming, cattle farming. Okay, all this purpose. Your natural resource, you may use it for other activities, like for the purpose of you actually create a resort, you give a stream, all those stuff and all you give, or you create an artificial pond, lake, and you develop fisheries in it, aquatic activities you develop, and from that you you do fishing, and you do fishing as a business. Different. Please look at this. So same intangible asset, which is being explored in a different perspective. Okay. So generally somebody was asking about the oil wells and all. So natural resources are of two types. I want to tell you. One is a natural resource which is renewable. Another natural resource which is non-renewable. For example, mining. Mining is there is a coal mine, there is a graphite mine, there is a gold mine. Okay, there is an iron ore mine. So mining activities. That is why in natural resource there is a concept called depletion. Generally, accountants, they will understand the concept called depreciation. Depreciation is for asset, and amortization is for intangible asset. And another category of the depreciation or amortization is called depletion. This is actually for natural resources, because and the natural resources you will actually deplete it or depreciate it based on production method or unit method, consumption method. What is the total tons available? How many tons you take? Proportionately, you will deplete the value of the asset. So otherwise, depreciate it. That is one method. So that is why market approach, I will actually leave it to you, because generally market approach is the most, I will say, and not approach which will apply for intangible asset. But there are certain cases you can apply market approach. For example, you have a similar asset and you have the data. So two challenges are there in market approach. Number one, the subject asset, you need to have a similarity with your market asset. Okay, that is number one. Second, that asset must give data to you. So what do you call it as availability of data, sharing of data, that availability of data and similar asset. These are the two challenges with respect to market approach. But if like a Bollywood style movie, the most simplest method of valuation of an intangible asset is, okay, I have a very similar asset there and they are sharing data to you, that the data is available. You have the valuation just now done 6 months back or 3 months back, you can take it. You will have very similar asset, but the valuation would have been done 10 years back, 15 years back. Can I take it? No, you can't take. Maybe you can take it, but you have to add premium or you have to tweak it. So all this stuff you have to do in market approach. So the value of an intangible asset is determined by reference to market activity, identical or similar assets. So this is the main challenge with respect to this. So I will, for the time being, keep this approach, and I'm focusing on this 5 methods, which is the most practical method. We are almost to 4 o'clock now. So we have the next half an hour to 40 minutes. I'm going to focus only on income approach with a lot of examples I'm going to discuss. So please pay attention. And valuation methods commonly used. Okay. So what are they? So I was just discussing about that assembled workforce also. I never discounted it. You remember? I never discounted it. Only Indian accounting standards, they are very, very, I will say, prudent with respect to recognizing assembled workforce as an asset in the balance sheet. But nevertheless, international valuation standards or ICRV valuation standards, they are very clear that even an assembled workforce, you can actually do it. And cost approach, you have to actually adopt. Now, with respect to most commonly used methods, you have the mean method, the relief from royalty method, and the discounted cash flows method, incremental cash flow, with and without method. This is actually a DCF method. Technically, all are DCF method only. Mean method, relief from royalty is also DCF method only. Okay, this is just to give an idea. I will now focus into one by one. Okay, with a lot of inputs, I'll try to go into it. Now, I'm sure a lot of questions are coming up. I'll try to actually go one by one. Good. Now, let me go into it. Okay, good. So these are the 5 methods. What are various income methods? Excess earning, relief from royalty, with and without method, otherwise called premium profit method, greenfield method, and distribution method. So now income approach. So one by one, I'll try to actually discuss income approach with examples, with illustrations. Okay, so that all of you have some clarity and with respect to this. So let me first take you to the first method. Okay, I think I have the examples arithmetic also I have given. So I'll try to take one by one arithmetic. Okay. So let me now take you to relief from royalty method. Okay. Relief from royalty method. Okay. Relief. Now, before I take you to this relief from royalty method, maybe I'll give you a summary of connect between all these methods so that you try to have an idea. Mean method and distributor method. These both methods are actually connected. Mean method is actually a multi-period excess earning method. Multi-period excess earning method. It's called mean method. Not the meme what you get in WhatsApp. Okay, so that meme is different. Okay, so multi-period excess earning method and distributor method. These are the two methods you will adopt for valuing an intangible asset, especially in a company when you have more than one intangible asset. For example, you have what do you call it as a brand name. Okay, so brand name is one intangible asset, and a customer list customer relationships as your another intangible asset. So you have two intangible assets. Wow. Now, how do you do the valuation? The primary intangible asset of these two, you need to identify a primary intangible asset. So the primary intangible asset will be valued using the multi-period excess earning method, and the secondary intangible asset will be valued using distributor method. I normally give a very practical illustration like mother-in-law and daughter-in-law. So generally in a family, the the key person is mother-in-law only. Daughter-in-law will come next only. Okay. So even though people will say daughter-in-law is everything, you are Mahalakshmi of this family, all this stuff. But practically speaking, even you ask daughter-in-law say first you ask mother-in-law, let her say yes or no. So the mother-in-law of these two methods is M. M is mother-in-law. So multi-period excess earning method. Daughter-in-law is D. So distributor method. So the primary intangible asset will be valued using the multi-period excess earning method. The secondary intangible asset will be valued using the distributor method. Now, since all these are income approaches, how will you do? The future cash flows minus the expenses, the net, and apply the discount rate and find the present value. The present value is actually your value of your intangible asset. Wow, up to this I'm clear. But I'll add flavors and masala to this. The first masala is I'll take the greenfield method. Okay. And I'll show you the arithmetic part also, so which will be very interesting. So let me show you the arithmetic. So greenfield. Okay. Yes. Greenfield. Yes. Now, where will you use this greenfield method? Okay. The word greenfield says, so I'm first starting with greenfield. Then I'll go for the other method. And one or two examples also I'll give. Okay. What is greenfield? I said I went to this Mitra Samaj. Let us assume that Mitra Samaj has agreed. Okay, I'll give the franchisee the formula, how idli and vada has to be made. Okay, you tell me, guys in Bombay, Delhi, and Chennai and all, and also in Calcutta, there's a great market for, very big market for idli and vada. Lot of very good, you have fans for idli and vada, that too you give quality idli and vada. Okay. So now say in Chennai and Mumbai, I want to open a franchisee of this Mitra Samaj, Udupi Mitra Samaj, Udupi Mitra Samaj, franchisee. Okay, GKR is a franchisee of Udupi Mitra Samaj. Now, the guy at Mitra Samaj, he is very skeptical. He doesn't know what to do. So he asked you are the valued friend of Mitra Samaj. See, you do the valuation and tell me what is the franchisee agreement. When I have to sign the franchisee agreement, how much I have to ask for the franchisee. Okay. So this is a greenfield project because only when this agreement is signed, I am certain about the, what do you say, the brand and all this stuff. And my entire business model, I have to only build on that franchisee, including your 5G spectrum, broadband spectrum licenses, 4G, 5G, broadband spectrum license. Once it is given, then only I have to put the Bhumi Puja for my business. Okay. All things will start only from there. That is what's called greenfield. Okay. The sub value of the subject intangible determined using cash flow projection that assume the only asset. Only asset. That is the only intangible asset for me. So I will say 5 years is the Mitra Samaj, what do you say, the contract period. Okay. So what is the 5 years revenue? Okay, he's not sharing revenue. He says, I want a lump sum fee. So 5 years revenue minus expenses, the depreciation, rent, electricity, that, everything I'll put it. So discount at some 12%, or 10% or 15%, what is my cost of capital? I will arrive at my present value. That present value is the surplus in today's terms. And that guy, for example, that surplus is around 24 lakhs. 24 lakhs. What Mitra Samaj guys will ask me? They will ask, okay, you pay me 80% of that. 80% you will take, 20% what I will do? 50-50, 40-60, then there will be some discussion on it. So this is called greenfield method. Good. Now slowly I'm taking you to the next method called relief from royalty method. Relief from royalty. This is otherwise called RFR. Okay. Okay, this is otherwise called RFR. Now I'm going to show you an arithmetic also so that you are actually clear with this. This is the relief from royalty mechanism. Okay. Now, how this relief from royalty works? The steps I have given, but I'll try to first explain this so that the arithmetic is very clear. Okay. Under relief from royalty, okay, the value of an intangible asset is determined with reference to the value of hypothetical royalty payments that would be saved. This is very important. Relief from royalty. So now, the moment I pay and I buy a intangible asset, I need not, for example, if I rent that intangible asset, if I take that intangible asset on lease, but I am using that asset and I am generating revenue, then I have to pay some share of that earnings I have to pay. Now, if I own it, I need not pay that. So therefore, that payment is a relief. That payment is a savings. Okay, so that is what is called relief from royalty. Now, please look at this arithmetic. What is the revenue from trademark I want to buy from some guy? Is the revenue from trademark over a period of 8. Okay. So what is the pre-tax royalty rate? 5%. Okay. So the pre-tax royalty savings, which is 5% on so royalty is actually 5%, which you have to pay. Then 5% of 300 is 15, 5% of 400 is 20, 5% of 500 is 25. So all these are your relief from royalty. This 15, 20, 25, 30, 38, 36, 25, and 10 is your relief from royalty, RFR. Okay. So what is your tax rate? Tax rate is 34.61. So that you have to subtract. So post-tax royalty savings, because once you say savings, on that your income will be there. So you have to pay tax. So net relief from royalty, that is after tax relief from royalty. And time factor here, it refers to the average part. What do you call it as? Maybe many of you who have done your valuation exams, there is a concept called end of the year convention and mid of the year convention. So all these cash flows, you can presume that it is happening at the end of the year. Then you will put 1, 2, 3, 4, 5. Mid of the year means 0 plus 1 by 2, so half year. So we'll presume that the cash flows are even throughout the year. 1 and 2 by 2, so it is 3 by 2 is 1.5. So they, instead of putting it as 1, 2, 3, 4, 5 and then discounting it, they put it as 0.5, 1.5, because by putting this mid of the year convention, your value will be more. You put 1, 2, 3, value will be less. Please check in arithmetic. Please check this. That's a very interesting calculation. So I'm using a present value factor, multiply the present value of the post-tax royalty savings. Add that, you get 76. And remember, there is a tax amortization benefit you have to add to this. So because whenever you buy this at 76, there is a possibility of, because once you create this as an asset, 76 you pay today and you create an asset, then you are eligible for amortization. That amortization you are eligible for tax saving. On the tax saving, again you put the present value, you again multiply and you get the the present value of those tax saving on the amortization of your. Okay, so once you do that, then that benefit also you have to consider, which you have not considered in your calculation. So therefore, there is a factor. You can either you can do that working separately, find out a number and then add to 76, or you, what do you call it as a, like a factor for every 1. Okay, if it is 1 rupee, how much you calculate for every 100, you arrive at some number, and then you find a multiple and then add that multiple to it. So that, like that also can do. So whether whatever may be the answer, the calculation is going to remain same. Okay, whether it is 100 or 200, that structure is going to remain same. So you for 1 rupee, find the multiple and then add that multiple here. So that is another very, very interesting calculation. So this is called relief from royalty. Now let me actually explain that, which is very, very interesting, which is called, what do you call it as, multi-period X. If anyone wants to actually ask a question, you can raise your hand. I can unmute you. Anybody wants to ask any question? I'll unmute you. Anyone? Or shall I go for anyone want to ask? No one. Okay, right. Check. So maybe nobody has asked.
Not asking any question has two parts. One is everything is understandable by all, or if nothing is understandable.
Maybe we will ask by random. That will be ideal.
So please be interact. Anyone.
We will ask Mr. Patel, Chirag Patel. Chirag Patel, I've asked you to unmute, please.
Yes, sir.
Mr. Patel.
Yes, sir.
Very, very good afternoon, Chirag.
Good afternoon, sir.
So how are you and Diwali की तैयारियां कैसे हो रही हैं?
एकदम मजे में, sir. How are you? How's your Diwali?
So Diwali की शुभकामनाएं, बोलिए कैसे चल रहा है intangible asset valuation का session?
Yeah, it's very beautifully explained. So this actually I was planning to learn this relief from royalty method. It's good that you have shown it with an Excel calculation, so it becomes more clearer.
So nice of you. Any questions you want to ask in particular?
Actually, the tax amortization benefit factor I was just contemplating. So I have just what we call it's a new thing for me. So I'm just thinking about it. So I'm trying to understand that.
Okay. Maybe each table creation takes a lot of time for me. Maybe if some more time was there, I would have done even one more table for tab also.
Right.
But I'm sure with whatever experience on your own.
Okay.
It's very simple. The same 76. 76 is here is your relief from royalty. Right. You amortize it for 8 years.
Okay.
It for 8 years. Your tax saving on the depreciation you calculate. You apply the PV factor on the depreciation. Right. And what is the present value? That present value is your tab, tax amortization benefit, which is paying 76, you get that benefit.
Okay, so that ratio we have to take, then that ratio would be this factor. Okay, I got it.
That will be actually 22 in value terms. It will be 22 aayega. Right. You can just treat that as 0.29 as a factor and apply here. Either of that method.
Yeah.
I'll just share with you. Yeah. Then thank you very much, Chirag, and you that tax amortization benefit slide also. Okay.
Yeah. That would be great. Thank.
Look at this paragraph with respect to tax amortization benefit, which is given at the end of. I want to show you this. These are all the special considerations which has to be done in valuation of intangible assets. That is benefit, which is given in section 110. So please look at section 110. This is 110. Yes, this is 110. Tax amortization benefit. And I will just give you the comparison between ICA RV 302 intangible asset in para 30. It also they discuss about tax amortization. Tax amortization benefit is a hypothetical benefit. So relief from royalty is also a hypothetical relief. If at all you buy, what is the relief from royalty you get? Similar benefit is also hypothetical benefit. If you buy, what is the benefit you get on the investment on the trademark or brand name? Available to a market participant, there is a buyer by way of amortization, depreciation of the acquired intangible asset. Because you are not acquired, but hypothetically you are doing the calculation that you are going to acquire it, thereby reducing the tax burden. So this is the definition of the tax amortization benefit in ICRU valuation standard, and please, equivalent definition is given in 110 of International Valuation Standard, where they say in many jurisdictions intangible assets can be amortized for tax purpose. India, you can do that, reducing a taxpayer's tax burden and effectively increasing the cash flow. So depending on the purpose of a valuation and the valuation method, it may be appropriate to include the value of TAB in the. So that is about. And what is the discount rate you will take? The same discount rate that is available for valuation intangible asset to be valued. relief or royalty. Good. Now let me take you to another method. That method we call it as mother-in-law method. Okay, the meme method. Mother-in-law, the multi-period excess earning method. But this method you need to be very, very careful because you have actually two assets. So therefore, how will you actually value? This is that arithmetic I want to actually explain. Now, please look at the excess earning method. Now, I'll give you an idea about this. Now, you want to actually value a primary intangible asset. Now, you have various. You have a primary intangible asset, you have a secondary intangible asset. That means two intangible assets are there. Now, you want intangible asset. So, you select meme method. You will do the cash flow for the entire company as a whole. Wow. Entire company as a whole. Okay. So, what is the total revenue? Okay. Less the expenses. S, very important. Less. Now, if you do the thing, it is actually enterprise valuation. What is the total revenue minus expenses? What is it? What is called enterprise value? Now, here you are not doing enterprise value. You are going to value only the subject intangible asset. Now, how will you do the valuation of subject intangible asset? You will knock off. You will subtract the contributory assets. Very important word. Contributory assets. What is it called? That is called contributory asset charge. Now, what are the contributory assets? The contributory assets are your working capital. Okay. Other than the intangible asset, and your second also contributory asset. Okay. So, other than the main intangible asset, you find out what is the value. You arrive at how much this asset is contributing to the income generating factor. That working is a very, very important working. So CAC calculation, you have to do individually based on the past data. Based on the past data, especially based on the past 4 or 5 year data or 10-year data. What is your working capital? What is your fixed asset? What is your fixed asset other than the subject intangible asset? What is your other assets, if at all there? And what is the percentage it contributes to the revenue or to the knockoff? That will knock off from your total. Thereby, what is balance is called excess earnings. Balance is called excess earnings. That excess earnings is only because of the presence of primary intangibles. Interesting. So you have a very big revenue. On that, you will identify what is the direct revenue which is contributed by a fixed asset, by a working capital, that and knock off those things. So what is left out is called the excess earnings. So assets that do not contribute to the prospective cash flows associated with the subject intangible asset are not contributory assets. It's a very, very important concept. And the steps, if you look at this, now how will you work out this? I'll explain this and I'll go to that arithmetic part, that table part. Forecast the amount and timing of revenue. Okay, that is your total gross revenue. Forecast the amount and timing of expenses that are required to generate the revenue. So that also clear. A and B is generally what you do for valuation of enterprise value. So A and B you have done. Okay. Then come to the next one. Adjust the expenses to exclude those related to creation of new intangible assets that are not required to generate the forecasted revenue and expenses. So profit margins in the excess earning method may be higher than the profit margins of the overall business because the excess earning method excludes investment in certain new intangible. This is very important. Now please look at the arithmetic idea. Yes. Now please look at this. What is your from customer relationship? So 300, 400, 500, 600, 750, 725, 500, 200. EBIT margin. So earnings before interest and tax. This is your what is your revenue, what is your expenses, all this stuff. So revenue minus expenses is 100 minus 85 is 15. So directly 15% of 45. If at 30, 300 is 45. What is taxes? 34.61, let us presume. You calculate it, subtract that. So this is profit after tax. This is 29.31. Now, this is your enterprise value steps. That first, up to the blue color is enterprise value step. From this, you are going to knock off. Once you knock off, you get accessory. Now, what you are going to knock off? Contributory asset charge. What are the contributory? Tangible fixed asset other than the intangible asset which you are going to value. Net working capital, how much it is contributing? This 0.6%, 0.25%, 1% and 0.1% has to be calculated based on the past workings. This is the one place where you need to actually, that is why sometimes this data is very interesting data. When two valuer they meet, they'll ask, hey, what is the CAC charge, contributory asset charge for an industry like power sector, for an industry like an agricultural producer company, for an industry like glass manufacturing, for a paper manufacturing company. So for a company which is in a cloud business, what is a CAC charge? So I applied a CAC charge of 4% on tangible asset, 5% on working capital, like that they will say. So can I take that data and apply here? No, that number is applicable for your number. You have to apply for your company based on your past records, past performance. This is one very, very interesting which has to be done. So this I'll request AIIOVF further workshops. That's called workshops. So what workshops?
Definitely, sir.
Huh?
Definitely, sir. But we'll take support from you.
Workshop on calculation of intangible asset using meme method. So there we will only take one case study. With the data we will give, how to arrive at the CAC charge based on the data, how to do the calculation of intangible asset for the what is called as the primary intangible asset. So we'll take a 2-3 balance sheet, 5 years past data we will take, try to calculate all this stuff. So this will be very, very interesting. And once you do one exercise, I think you can do any number of valuations. So once you knock off these data for all these years, this is a asset charge which you knock off this 5.85 from 29. This 24 is the excess earning, and that excess earning is only because primary intangible asset. Again, the time factor, present value factor, all this stuff is the common. You arrive at the present value of the excess earnings, and naturally, tax amortization benefit will also be there. If at all that has not been brought into your books of accounts, so naturally you want to buy that as a primary intangible asset, or you want to actually enhance the value of the asset by paying that amount, and you want to book it in your books of accounts. So then there is a concept called tax amortization benefit also you have to consider. So then the valuation becomes 303. It's very, very interesting. I think somebody has raised their hand. We will ask them to speak. Maidili Yam. Somebody has raised their hands. So who has raised hand? Yes. I'll ask them to speak. Yeah. You can speak now, madam.
Sir, just wanted to understand on the workforce, why would you take a percentage for contributory asset charge for workforce? I can understand working capital, other intangibles, and tangible fixed asset. Why would we take it for workforce? Isn't it always already considered as EBIT?
That's a good one, actually. Now, this is one thing I want to make an observation, that when I was discussing, I mentioned that multi-period excess earning method will be adopted when you are going to do the valuation of a primary intangible asset and distributor method for an what do you call it as a secondary intangible asset. Now, what you have to do is you need to knock off contributory asset charge. You have to knock off from the profit after tax. How will you knock off those assets other than the primary assets? Those assets other than the primary asset which is contributing to the overall revenue. So I will identify one by one. While identifying one by one, tangible fixed assets only I have put. I have not put that secondary intangible asset I have not considered here. So then you have net working capital. Okay, other intangibles. So that is your second, what you call as the second secondary intangibles. Okay. Now workforce. In this case, in this example, what I have taken, this is a practical illustration what I have taken. You can actually include this workforce, assembled workforce, also in other intangibles. You can even make it as 1.1 also and say that as other intangibles. But this case, they want to actually consider the assembled workforce also as intangible to actually value it, and they want to identify what is the contribution this assembled workforce are making to and more you go for the minute working with respect to individual asset. I'll tell you guys, the billing also will be more. For example, I can just say tangible fixed assets, net working capital, other intangibles, I can include both. And I can say 1.1%. Now you want to actually identify how much the workforce are contributing to the respect to adding value to your business. So therefore, there are certain skilled workforce. Without them, business will not come. Without them, the value addition will not be there. So I want to identify that also. Then time involved with respect to that, the data involved with respect to will be more. Fees also will be more. Remember, mean method fees will be 3x, minimum 2x or 3x. Non-tangible asset valuation and mean method valuation, it involves a lot of work, a lot of time, a lot of data the company has to provide to you. So therefore, this is one way, good only. Else you can include that in your other intangibles. So I must appreciate you for that very fine observation which you have made. Thank you very much. So maybe I'll ask one more randomly another person to share his views. Shall I ask Shruti Akula? Sai Shruti. You can unmute yourself. Sai Shruti, good evening. Yes, you can speak now. Yes, you can speak now. You are not audible. Or maybe we can ask.
Sir, who wants to speak? Maithili.
Sai Shruti. Maithili Balasubramaniam, she has spoken.
Maithili ji,
yep.
You may.
One more query, sir. Actually, nice that you actually touched upon it's a live case. I'm actually currently doing a case which is very similar to this, where exactly like you said, we have a carve out for customer relationships, then assembled workforce, as well as customer contracts. So in that case, we were actually contemplating how to create for this what do you call contributory asset charge. So can you give me an indicator as to how I can actually give a percentage weightage for the where I will have to bifurcate the intangible into different buckets? How do I create a charge out for that? I understand from the networking capital I can do using their past data, where that would provide me an indicator as to how the working capital has moved and arrive at the CAC. But for the intangible side, if you can give us an idea as to how it can be captured as in order to bring it and strip out from the other total goodwill value.
Actually,
helpful, sir.
Thank you. It's a very, very practical question. I'll give you an indication here. Now, for example, let us take the customer. Workforce means you will have some names actually in the company. Rama, Krishna, Govinda, Arjuna, like that you will have some names. So you have some 7 names actually who are very skilled. and just ask the client, minus these 4 gentlemen, you replace these 4 gentlemen equal caliber, will the revenue will be same or will it drop down? This is the question. Actually do a lot of not of course quantitative directly you cannot connect. You need to be very much qualitative and connected to the quantity based on the qualitative factors. So these are all some of the questions, queries you need to actually list it out with respect to maybe an attribute or an intangible asset like workforce. So we need to actually do a lot of homework with respect to those secondary intangible assets. So these are some attributes. So not a conclusive method for conclusive method for all companies. For that kind of client, you need to actually do a study, and maybe you have to customize various questions. Minus this, can you do business? Minus this, is it possible? They will say yes, we can do, but we will not be doing that much. Some of the clients, they are very much connected with those skilled people. No. What they're otherwise, your company and Arjun are inseparable. Something they will say. Then for it. So you try to actually connect your client's business with respect to the intangible asset. Minus that, plus that. Minus that, plus that. What is the effect on the revenue? So like that, we need to actually extrapolate the data. Thank you very much. So now let me take you to the other methods. So especially meme method is over, greenfield is over, relief from royalty is over. Now I'll take you to WWM. So with and without method. This is another method which is actually very simple, but scenario will be different. Like for example, generally the method what we use for WWM scenario, okay, the with or without scenario, we generally use it for, I'll just show you that the first one. Yes, please look at this. A with and without method indicates the value of an intangible asset by comparing 2 scenarios. Now, when will you use this? Okay, you will actually use this in terms of, for example, non-disclosure, non-competing arrangements, non-competing contracts. Non-competing contract is a very, very classic example for with and without method. Now, let me give an example of a particular non-competing contract, right? A non-competing agreement, where somebody says, you withdraw from this, I'll pay you a lump sum amount. Now, how much? He says, I'll pay you 5 lakhs, I'll pay 10 lakhs. But the contract size is 40 crore. The contract size is 40 crore. And I am L1. And L2 guy says, you withdraw from L1, I will be getting this. And I'll pay you for signing this non-competing agreement, I'll pay you 10 lakh rupees. Now, is it worth a 40 crore contract? I'm just by saying no to it contract, I'm getting 10 lakhs. It is one way for my signature, I'm getting 10 lakhs. But is that worth that signature? That is where the challenge is. The with and without method stipulates that you will work out with, for example, you already have some 5 contracts. This is the 6th contract, which is a 40 crore contract. So for 6 contracts, you work out the revenues for the entire term, minus the expenses, minus all the stuff, tax benefits, everything, calculate the net, and then apply the present value, arrive at the present value. Now, knock off that 6th factor, knock off that 6th contract, you are not doing that. So balance is only 5. For that 5, what is the revenue for the next few years? What is the expenses, that is present value, tax benefits, everything you put, arrive at the present value. Naturally, the 5 contracts present value will be lower and 6 contracts present value will be higher. And the difference between these two is the valuation of the intangible asset with respect to non-competing agreement. Actually, that gap is the benefit you get from signing that particular contract in present value terms by committing to that. But of course, you have to put all the effort, everything you have to put, and you have to get that benefit in present value terms. Now, for example, that value is actually out of 40 crore. The values, net present value is actually 5 crores. 5 crores. He says, I'll pay only 10 lakhs. Now, he will say that 5 crores is the total earnings, which I am the, what you call, the active partner, the active person in it. So I must get the maximum share. So out of 5 crore, I will take 80% benefit out of it. Even if it is 80%, 5 out of 80% is the 4 crores. 20% out of 5 crores is 1 crore, which is 100 lakhs. So what he is paying is only 10 lakhs. So therefore, with and without method will actually give an edge over that person to actually negotiate and enhance the value for that intangible asset. That is called non-competing agreement. So a signature is worth 1 crore actually. Even though 80% share he will take, 20% is his. What is that 20% value? Okay, so that is where the with and without method actually adds value to it. Now I have taken 1.5 hours of your time. So I must compliment each and every one of you for being very, very patient. And maybe I will be available for further more questions, if at all that has been posted. And may I request the host Vijay Kumar Gupta to take over, and maybe we will discuss some of the questions if possible. Actually, I am sitting on top of a hill in Nilagiri district, and from there, with the available connectivity, I'm getting connected to this particular program. So, any questions? I think there are some few questions. Let me take one by one. How to value large oil asset which is still in capital work in progress? Oil extraction which will require further funding considering the downfall in oil prices. So as I told you, these are natural resources what you are valuing. You can go by income approach, number one, and based on that arrive at the present value. But of course, since you are having that oil prices fluctuations, you have to consider that risk, either inbuilt that risk in your prices or inbuilt that risk in the discount rate. Anything you have to do. So either one you have to do. Don't do it in both these things. If customer list is purchased, can it be capitalized as an This is India 38 question, Ashok M. If customer list is purchased, you are actually paying at cost. You can actually capitalize it. You have to capitalize it. It is actually the prescription under India 38. So you can do it. So very good question. Is an intangible asset possible in a loss-making company or an IBC case? Oh, who is this gentleman? Pinakesh Bilimoria. Yes, why not? I will actually unmute Mr. Pinakesh Bilimoria. So where is it? Pinakesh. I want to hear from you. Yes, Mr. Pinakesh Bilimoria. You can speak now.
Good afternoon, sir. You have been very kind in sharing your experience, and
Please
you've
go
been
ahead.
very
Please go ahead.
detailed.
You are referring to some question. I wish to hear from you before answering question.
Sure. So I wanted to check, would it be a worth? You may have an intangible. Would it be a worth in a case of a loss making, and especially if it's a IBC case?
No, it all depends upon what is the type of company. For example, the company is a manufacturing company. Then the quality, what they have been maintaining all these days, the process what they have developed to arrive at that quality product, definitely is an intangible asset. So you can actually, that actually retains their customers. Their customer relationship is retained only because of, I repeat, it is only because of the process and the quality what they have maintained. So whenever you do the enterprise value of that particular company, naturally you need to have a factor, you need to have an item to be factored to your enterprise value with respect to that particular aspect, because that is the aspect which they have been continuing for very many years. They have not diluted on that. So I don't know about the company which you are referring to. I'm just giving a hypothetical scenario. So therefore it is possible. So in the enterprise value, you can actually enhance it. So thank you very much. Anything you want to add, you can.
No, thank you. This is good.
Then next, let us hear from Mr. Alamelu is asking, hope you will share the presentation. Presentation, I will actually upload it in another 10 minutes in my blog. You can download from my blog, the www.3spro.blogspot.com. You can download it. Shirley Matthew is asking one question. Please share a practical case with the help. Will help in better understanding of CAC. Yeah, we are going to do one workshop on that. So I'm sure you will be in a better position to actually understand that arithmetic part of it.
Sir, 2 more RVs registered today itself from our RV.
Oh, is it so? So congratulations. So Diwali ki good news.
One is R.K. Raman,
Uh,
who is asking many questions.
Oh, is it?
Maybe remember. Yes.
Okay.
In your batch, he is asking the maximum questions.
Okay. Sir, we have no comparative for the with and without method. So how so address it, especially in service sector? No, you need to go by some hypothetical data. And in your valuation report, you can put that. Since you don't have a practical comparative data, so I am going by hypothetical, especially with respect to your question is with respect to market approach or cost, income approach. I don't know. I'm presuming it is for an income approach. So then Mr. Parveen is asking one question: how to value brand for IBC company having no sales for past 3 years, no maintenance? Brand is gone. He is not able to encash his brand. So brand will be there only when he is maintaining that. So when there is no utilization of brand, the brand value is actually being depleted. So therefore, my view is they should have valued it quite some time back. Maybe if they have not valued it before, I don't think there is a purpose now to value it. So as I told the answer before, for IBC cases in your enterprise value, if you really see the worth of certain aspects which will be taken over by the buyer, that is a prospect to resolution applicant, you have to factor that in the enterprise value. So thank you very much. Maybe I'll hand over the session back to Vijay Kumar ji, and anybody else who want to actually share your views. Maybe let me request Vinod Chandra Gandhi. Vinod Chandra Gandhi, I have unmuted you. You can speak maybe if you wish to share your views. Or maybe I'll request anybody else. G. Kannan. I'll request G. Kannan. I have unmuted G. Kannan. You can speak.
This is a very complicated subject. I think you must have the queries and queries.
Yeah.
Because we have to value the asset which is not available in physical.
So physically available.
Just like Malia's Kingfisher branding was valued at 400 crore.
Yeah,
and it was mortgaged to IDBI Bank.
Correct. That was actually pledged.
Yes, that was
actually pledged. The bankers, they
IDBI will not get anything.
Yes.
So correct. That valuer may be guilty that how you have valued at 400 crore, but at that time it was valued.
That point of time, the Kingfisher calendar is very, very popular. The moment they print it, it will be sold. Why it is Kingfisher calendar is sold? Because of the photograph and the models in it, and the brand value which Kingfisher has created. Even today, Vijay Kumar ji, you go to any of the star hotels and ask for a bottle of beer, they will first only will ask, if you ask for an option, the first option is Kingfisher. Kingfisher, even today, they have the brand value. They have that.
Sir, I am the teetotaler and I know the only name Kingfisher brand.
Yeah, I know, sir. Now, which is your liking? Which brand you like? I know. Okay. So now, Mr. Kannan, can I hear from you?
Yeah, good evening. It was a very wonderful session. Sorry, I unmuted. Unless until we know some practical aspects, all theoretical aspects can be found in anywhere in the textbooks. Only the practical aspects can illustrate more knowledge to the participants.
Correct. Thank you very much, sir. Yeah. So we'll also get one more last.
Mr.
Mahesh. Mahesh. We'll hear from
Vijay ji.
Any query?
No, I did ask sir, and he kindly responded.
Actually, आपके नाम से मुझे Big Four की याद आ जाती है.
वो बात सही है.
इसलिए मैंने
No, absolutely. That's why I raised a couple of questions for the benefit of everybody, and sir has explained it.
So nice,
Thank
so
you.
nice. And we'll hear from one person from South, Kaveri Gounder. Mr. Kaveri Gounder, I have unmuted you. Mr. K.V. Subramaniam. Yes, you can speak, sir. Mr. Subramaniam. Or we'll ask Mr. Ramji.
Ramshankar ji.
Ramji Mahadevan. Ramji Mahadevan. Or Neeru Gupta. May I request Neeru Gupta? Okay, ji. So maybe we'll conclude. All of them are very keen for the Diwali celebrations. So let us close it early.
So first of all, सभी को दिवाली, धनतेरस और छोटी दिवाली की शुभकामनाएं. And in the times to come, intangible will be the main subject for valuation. क्योंकि जो assets दिख रही हैं उसकी valuation तो कोई भी कर लेता है, जो नहीं दिख रही है. Even there may be huge difference and both the valuations are acceptable. At the time when I was doing CA, 2 valuation reports came for Maruti, and there is a difference of 400 crore, and both are legally acceptable because of the adopted methods at that time and the terminology available and the requirement of valuation की valuation कराई क्यों जा रही है. So please ask as many questions, and Gopal ji is available for you in the future as well. He is a multi-talented professional and giving lectures in CA Institute, CS Institute, CMA Institute at different branches of all the 3 sister concern body specifically, because all the 3 institutes are the backbone of the financial institution in India. So I'm thankful Gopal ji, who is always available for my RVO, for me. At any time I ask for any lecture or for any query, so he will be helpful for you as well. So whatever queries you have, you can ask from me or my RVO or directly to the Gopal ji. The details of Gopal ji is available in his presentation. So thank you, and the CP certificate will be dispatched by mail within a week itself. So thank you all the participants, and a special thanks to Gopal ji.